Morning. This is Tom Alexander. It is Sunday, September 19th, and I want to go through some of the details that are in the report this week. So we'll start with this view. Let me get the camera going here. Okay, so let's take a look at this view. And these are the daily charts, the cash charts. I want to highlight a couple of things here. So we'll do this. And I lost my chart. We'll put it back up. Okay, let's see. All right, here we go. Nope. Here, now we go, I think. Well, I'm having issues with what I want to do here. I was going to use my drawing tool. I can't do it. I'm not going to waste any more time trying to figure that out with all this stuff interacting with each other. So we'll just bear with me and follow my mouse. All right, the levels you see highlighted on the screen here are very important levels from different perspectives as we head into Globex trade tonight and then Monday morning. In particular, Friday's highs are important for a number of reasons. Number one, previous days extremes are always important. So we had wide range down days in 3 of the 4 indices. The Russell being the exception. I'll get to the Russell in just a minute. It's its own animal at the moment. But the other 3 indices are attempting to break initiatively lower out of balance areas. This is auction market trading 101. When you have a mature structure and you have the market approaching the extremes, one of the extremes of that structure, you're very, very eager to see if it is going to break initiatively. The S&P, the NDX, and the Dow are all at the lower extreme. And in the case of the SPX, you've actually closed below it. You traded below it in the NDX, and the Dow is flirting with it. So it really hasn't broken yet, but we closed Friday in the cash market at an extreme, at a balance area extreme. So you're looking for a sharp move here. If it's not down, it's probably going to be up. And if it's up, it's going to give, the level to the upside. If we close above Friday's high now, and all 3 of these indices, I get to the RUT in a minute and the Russell in a minute, because again, it's its own animal. But if we were to close above Friday's highs now, it would portend a number of different things. We'll have to see, we would have to wait and see how it closes above there, what breadth looks like, etc. But now, just watching levels, Friday's high is important. Now let's talk about the Russell for a minute. The Russell is in the middle, absolute dead in the middle of balance of several degrees. It is confounding, perplexing, frustrating if you're trying to trade it. Raise my hand. Because it head fakes back and forth and back and forth, and it closed Friday literally. I mean, it's in the middle of a balance area, multi-month, a balance area that's been forming since the end of January, and it formed a little minor balance area last week that is inside the balance area of the previous 2 months. I could go on and on and on. It's the Russian doll thing. It's the same picture, regardless of the layer that you peel back. So, it's its own animal. Right now, the key in the Russell is to close above 2250. You have to give the benefit of that out to the upside. If you close below 2204, you have to give the benefit to the downside. Now, it is very, very likely that if we're going to see an initiative move in the S&P, the NDX, and the Dow to the downside, then the Russell will turn around, take out 2204. On the other hand, if we're going to do another bungee jump that we've all come to know and love over the past 18 months, and in particular the past 7 months, a bungee jump to the upside, then the Russell is likely to scream higher above 2250. Now let's look at this basically the same thing from a shorter term perspective. I'm going to show you the 30-minute charts here. And the levels you see highlighted here, these are 30-minute levels, and this is the cash session highs, or the upper extremes highlighted here. The lower extremes are the immediate downside levels. You can see how the Dow is kept flirting with this level and couldn't get through. This is the cash market. Same thing with the NDX. This is a really important level. There's an elevator shaft that heads a lot lower if the NDX is able to get above here. And our friend, Mr. Russell, you can see is nestled dead in the middle of a minor range on the 30-minute chart, daily chart, 2-month chart, multi-month chart, on and on and on. So that's where we are with this. If we take a look at the profile perspectives now, what do we see? We'll just take them one by one. And if we look at the ES, now this upper key reference area includes Friday's. Now these are futures contracts, includes Friday's high. And we're sort of in an elevator shaft now. There's no quote unquote support. And you guys know I don't like to use that term because it has no meaning whatsoever in auction market terms, and it shouldn't have any meaning in trading terms. If you're a trader, what you're looking at, you're judging levels as inflection points. And really the ES is between significant inflection points now. The next inflection point to the downside is around 43.60 to 43.45 down here, and back to the upside, it would be back through this this entire balance area in here. Okay, let's take a look at the NQ. Similar situation. Now this highlights the fact that the NQ is in an elevator shaft that carries all the way down to 15, about 120 to 15,062. Similar key reference area to the upside in the NQ. We'll look at the YM. YM also, it's in this balance area. It's at the very low extreme of this balance area. So it's at an inflection point to the upside. It's back up above this level in here. To the downside, it's all the way about 780 down to 33585 or so. And then we come to the confounder, Mr. Russell. And this is a beautiful view that highlights the degrees of trend at which the Russell closed on Friday. So it closed inside a multi-day balance area here. You know, last week's it formed a balance area, closed right at the middle. Well, if you look over here, it also closed at the middle of a 2-month balance area. And this 2-month balance area is also the balance area of a multi-month balance area. So this is a beautiful view of how balanced the Russell is at the moment, and it remains. Now, this is where I think things get really interesting. Let's take a look and discuss the internals. Now, for those of you that may be new, the 10-day moving average of advancing issues is this red line here. It's a 10-day moving average of NYSE advancing issues. The green's a 5-day moving average of advancing issues, and the blue is breadth. You can see that every single time we've had a breadth reading of negative 2,000 or lower, we have immediately bottomed and bungee jumped higher. We have not had a negative 2000 breadth reading in quite a long cycle now, and it's coming. It will happen. Now, I don't know, we could trade to new highs before it happens, but it's going to happen. And when it does, it's going to be a very, very important level. Now, it would be convenient for us. And how often does the market do things that are convenient for us? But occasionally it happens. If you look at the 10-day moving average and you go back through the history of the 10-day moving average, it's at a critical level now. It's at a level from where it's starting to roll over. You're seeing weakness in this time frame internally. Now, in strong bull trends, this will often mark lows. And also, one thing that you will notice here is that when we've reached this level in breadth, with the exception right here fairly recently of this pivot, we've also had a flush to the downside in breadth. We've had that at least short-term signal of something resembling capitulation. And that's what I think has so many traders on edge right now. The market has been grinding lower. This is the longest duration, time-wise, correction that we've had since back in February, back in here, where we did a similar sort of grind here. You can see how choppy this was, but it ultimately culminated in a negative 2000 breadth reading in here. I think it was right here. We got a little bit of a bounce, and then we got a lower low, which is, well, if the pattern here continues and forms something similar here, we'll have an incredible opportunity. But anyway, so what we're really looking for very early in the week, and if I'd be surprised if it doesn't start in Globex, if it's going to be to the downside, we'd like to see this flush in breadth that carries negative 2000 or lower. That will very likely carry the 10-day moving average down to an extreme that we really haven't seen very often. Well, we haven't seen in many, many, many months. We saw it back in, I guess, the end of July. But before that, we really hadn't seen it until way back in November of last year. So this is going to be yet another interesting few days in early in the week. Do me a favor, guys. If you found this helpful, like it. And if you have not subscribed to my YouTube channel, please subscribe. You guys have a great week. I'll keep you updated.